Afternoon, everybody. We are going to go ahead and get the ball rolling this week with our accounts payable workflow. So we're going to be talking about some different opportunities for when or when not to start using different areas of accounts payable inside of QuickBooks. I know that QuickBooks has so many features that people just think are meant for a certain industry, and so therefore can't apply to me because I'm not in that same industry. But I'm hoping we're going to hear some stories today about times when we have used these features. Hoping, I know we will. When we've used some of the features available in QuickBooks, not just for like standard AP workflow, but we'll also talk about some standards today. As a reminder, if you have missed any of our sessions, we do have everything up on YouTube. We have a playlist called the QuickBooks Enterprise course playlist. We have some other playlists in there as well for different classes that we've taken. So we've got, like Chartered Accounts class, we've got sales workflow class, and all sorts of different things up there. We also have a Facebook group, Fourlane QuickBooks Enterprise Facebook group. We were just talking about that a little bit. It's been quite a bit of activity in there. We do have 2023 coming out in September. There will be a release for Enterprise with some cool new features. I'm actually going to be talking with some of the developers on Thursday about it. I can't remember if it's this Thursday or next Thursday, but look for that also, where we're sharing the what's new, the timing of the what's new coming out. It's this year, September. It should be September this year, not October. Last year they were delayed a little bit, right? Also, whoops, jumped ahead. Also, just a reminder, we do have our on-demand support here at Fourlane. If you do not want to have to call Intuit support, we can be your IT person, right? You don't call Microsoft. You can give us a call instead of having to call Intuit support. Let's get started. So today, I'm joined by Trisha and Kat, and they're going to be helping me get through the AP workflow. Some of the topics that we're going to cover, so we're going to be talking about purchase orders, we're going to talk about inventory, item receipts, and hopefully if we have time, we can get to a little bit of enhanced inventory. And while we are popping through these different topics, I will certainly be bouncing around inside of QuickBooks. As you guys know, I like to bounce around. I like to be in product as much as possible. So where we're going to start things off this week is maybe, Trisha, if you want to kick us off, we want to talk about purchase orders a little bit. So with your customers that you have worked in the past, when has been a good time for them to consider using purchase orders?
For me, I always tell clients, basically think of it as anytime you need to track, whether it's your inventory or even, some labor costs, what's inside of your job costing, and you want to be able to run like some committed cost reports. So I always tell clients that purchase orders can be internal or external. It's basically used to be able to track. If you think of a purchase order as it's, between you and your vendor, it's a contract saying, this is what we want to order from you. Here's what the pricing, what our standard pricing is. So it allows that to be able to, start from the beginning of, here's what I need to order. Here's what I need to order from. And it allows you to even track it by job. So being able to order for stock or for one of your customer jobs and be able to keep track from start to finish of what is your cost in this job.
So I heard a lot of things in there. So, so one, I know, it's okay. So in the purchase orders, being able to, so we can use on a purchase order to track by job what we're purchasing, and it will show up on our committed cost by job report here. We also can have it show up right on our open purchase orders by job to know what's outstanding. Sorry, I kind of had to bounce around in here. I noticed that I'm in the contractor edition via accountant. So I must have done a toggle in here, and I got a little bit lost when you're talking. And then also about the rates. So that's really good. That's a really good point. So if we have contracted rates with our vendors, then we have the ability to, you know, if somebody's going in and putting in a purchase order, and in here it pops out and says $25, but I call the vendor and the vendor, Anderson's Hardware, is telling me $35, that's a good trigger point for my purchaser to say, wait a second, like, why is my system having a different dollar amount than your system? Is that right?
Absolutely. Absolutely.
And then we, of course, we have our little like graph here where we can see where and how much we bought it for from other vendors as well. So it's a good point. Can you tell me what, like, when has a client, what is a situation where people have had to keep track of their jobs on a PO? What's something that you can pull?
You know, I have a lot of construction companies, and so, you know, they want to track all their supplies. You know, they want to see in that budget workflow, you know, what is it that they need for this job. And so, you know, I tell clients that it doesn't have to just be inventory items. You know, we can use this purchase order to track every piece of your project. So them to be able to see that, you know, budget workflow and see, you know, like that report that showed the committed cost on, you know, what do we still have outstanding in this job?
I've seen it where, if for even internal, when you're saying services too, so I've seen it for even internal where we have done, like, you know, the item here will be like IT services as an example, and whoops, what did I just do? IT services, and we'll put in a quantity, because it goes based off of quantity or dollars used, right? No, it goes based off quantity used, not dollars used. So I'll put in a quantity of 10,000 times a rate of 1, and then I can increment against how many dollars we're using against the IT company that we have contracted with. Or we've seen the same thing, you know, I think I have at least shown that for people who do work with Fourlane. So they say like, hey, we have a retainer balance with Fourlane of $10,000, and then they'll show like the bills against it so that they can keep track of how much of the purchase order they have used or with, you know, with us versus how much is left over as well. Kat, what about you? What have you seen people decide to start to use purchase orders?
So I went in a little bit different direction when you posed this question, and I thought about before fraud happens. So I think, as you know, we've all seen with the pandemic and people working remotely, we've also seen an uptick in spammers, unfortunately, also working remotely. And I've had a couple of clients that either, you know, submitted a payment to a vendor that was not true, right? So it was like it had their true vendor name, but maybe different, you know, wire, like where they needed to wire the funds to and all that stuff, or where they just had seemed like to be real vendors, but they were not even vendors that were set up in their system. So for those clients, we've actually looked at their whole like AP workflow process, right? Who decides when you set up a vendor? If we're using purchase orders inside of QuickBooks, and if we get those fake bills, right, that don't, like we're entering the bill against the purchase order, they're not going to also have a real purchase order number. So it's not going to correlate. So even if they populate something in that PO number field on this fictitious bill, we're not going to have that purchase order number in QuickBooks, especially not for that particular vendor, where we can actually track and make sure that it's, you know, valid. So there's a couple of clients that, you know, we've taken over and they're outsourcing their AP to us. So one of the things that we implemented was purchase orders, so we could keep track of what they were ordering. And then as we're getting bills in, we're closing out those POs to make sure that they're, you know, receiving those items, that those are real bills. They're in the system. And then, of course, if anything looks outside of that, right, then that's like a red flag to question before paying, hopefully.
So maybe it sounds like too, so anytime we have multiple people involved in the process is one you know, when we're talking about growth in a company, you need to start having checks and balances. So you want to have fraud protection and stuff like that. Also, I mean, even in smaller businesses, I mean, if you're running your business, you can't always remember like what you told a vendor yesterday. It starts to blend together over time. So this helps you almost just keep track of you know, what you told somebody we're going to do, right? And then holds them accountable also to what they told you they're going to do. So they said we're going to give you $10,000 in services before we bill you again, then, you know, that's a good thing to have in the system here. The other thing, and too, to consider is when you go into preferences, right, in items inventory to turn on purchase orders, if you're turning on purchase orders, you're also enabling inventory. Like the two go together. It's one check box to enable both of them. So if you turn on inventory, you get purchase orders with it, basically, right? So speaking of inventory, Kat, what about you? What's a good time for people to consider to use inventory? When should they, like, what should be a trigger? Hey, maybe I should start tracking my inventory.
Yeah, so I think whenever we start purchasing items to stock where they're not purchased, like what Trisha was going through, right, where we're purchasing maybe material or outsourced services for a particular job. But if we're purchasing items that we want to stock, that was another thing that I had some clients trying to do to combat the, you know, long lead times for some of their products, was they decided they wanted to start buying raw materials and potentially manufacturing those in-house so they could control better those lead times. So they needed to start using inventory in QuickBooks because it wasn't going to be, you know, purchased for a specific job. It was going to potentially have some products that were sitting on the shelf for a while, in addition to obviously having inventory assemblies. The other thing that I look at with people is if we're reviewing our profit and loss report and we're seeing inconsistent margins month over month, that might be something, you know, where we have, you know, $1 million in revenue one month and we have 500,000 in COGS, and then the next month we have $1 million in revenue and we have 900,000 in COGS. Well, something is amiss there. And so that's another good time to really dig into what is contributing and impacting those numbers, because if we're not using inventory parts, those cost of goods sold are not recognized at the same time that revenue is when we sell them. Mm-hmm. Right? It's when we're buying them, they're hitting cost of goods sold. When we're selling them, they're hitting revenue if we're using like non-inventory parts. So that's also a good time to just take a look at if there are those types of scenarios.
Mm-hmm. I like that. So if we, you know, over time, a business should expect that they, you know, their margins are getting better, not worse, right? Because we're getting smarter as we're growing as a business. So our margins should be getting better and better and better and better. And if there's big fluctuations or potentially not getting better over time, then that should be a trigger for us to say, what's going on? What can we do to improve? Trisha, what about you? What are some times when you've said to people, maybe you should consider turning off inventory? Like that might not be a good thing for you to be doing.
Yeah, it kind of goes back to, you know, are we keeping, you know, an asset value? Do we need to keep an asset value? Are we keeping this product in the warehouse, or are we buying it for, you know, a specific customer? You know, so kind of just going through and, you know, figuring out, you know, when you buy this part, is it one-off for projects, or are you buying multiple? You're buying, you know, 10, 15, 20 so that you have them in stock. And, you know, we want to start tracking that quantity, you know, so kind of just walking with them and let's talk about your items and, you know, the different types and what the results are. As Kat was saying, like if, you know, you choose inventory, you know, where is that switch where we hit from our inventory asset to our COGS versus that non-inventory? You know, do you want to take that cost up front?
Mm-hmm. So do we hold the asset at any point? Should it be our asset at any point, or is it owned by the customer? That'd be one. What about, have you guys, can you, either of you, if you want to chime in about what are some of the things that you've seen on the inventory list that you're just, as an inventory item, that you're just like, maybe not? Like what are some of those things that we should definitely not see as an inventory item?
I'm actually working with a client right now that they have their labor hours set up as an assembly. And they are going through this manual workflow of creating a fake inventory bill so they can bring quantity on hands, because they thought that they had to manually track their labor to build their goods to sell.
So that didn't know that we could use service items maybe in there to do stuff like that. So if you have labor as an inventory part, then that's something that should be a trigger of maybe this isn't the best idea. Kat, how about you? Anything that you comes to mind?
Yeah, so I think anytime I see like a miscellaneous item where they're using it for a catch-all, that's a huge red flag. And also I think that sometimes, I think we kind of touched on this earlier, but clients think that it has to be an inventory part if they want to use it on a purchase order, and you can definitely use a non-inventory part. So we did a big cleanup project years back where a client had put, every possible thing they were buying. Toilet paper was on there, paper clips, all as inventory parts. So we talked about having, like a generic office supplies, right, non-inventory part that they could use for that, because we are just worried about how that's mapping to the GL also, right, from the expense side, that they could use as kind of a catch-all and not nobody wants to count how many rolls of toilet paper are left.
I have had people use it for internal inventory so that they could, because they had an issue, and I think it was very short term that we ended up doing this, but they were basically having an issue with departments taking too much supplies. So the supply person, right, for internal supplies literally would say, have a check-in and check-out. So if you came from the sales department and you were picking up toilet paper, they would charge the toilet paper, not as $0, it would be $0 revenue, but it would expense the cost of the toilet paper to that department so that they could show how much each department was using. And really, it wasn't toilet paper, but it was like paper clips and stuff. And I was like, you guys are, how much money are we saving here? What are we, like, how much is this costing us to do versus how much you're really saving and, making your employees feel shamed for asking for some more paper clips.
Or toilet paper, even worse.
I know. Oh, you're going to the bathroom again. The problem with it, right, with those miscellaneous items, like you were saying before, though, is that QuickBooks is there's two inventory evaluation methods. It's either FIFO or it is average costing, and most people function on average cost. So if I have a miscellaneous part and today I buy one at $10,000, tomorrow I buy another one for $1, then when I use those parts, that part on a invoice, it's going to take the average cost of all, right? It's not for the one, like the one $10,000 one, and it's going to cost out the $10,000 one. It's going to take the average of both. So having a singular miscellaneous part with that kind of costing and inventory can be quite problematic. So moving along in our workflow here, right? If we go back, so we have purchase orders, then we have receive inventory. So we have this concept of item receipts, which is a little bit of a go-between between a PO and a bill. So when are you guys talking about, or so Kat, I'll start with you here. When are you talking with customers about that they should use item receipts, that should be part of the process? They shouldn't go from PO to bill, basically.
So I talk to clients about that when they receive the product, and they might not get the bill for a couple of days, but they need to be able to show that they have that quantity in stock, right? So we don't have like an invoice number from our vendor because we haven't received the bill, but they need to you know, show that they've got that stock in off of like a, you know, like a shipping, the document terms escaping me right now, but packing slip, there we go. So they're receiving against that PO onto an item receipt against that packing slip, and then going in and entering the bill when they get, you know, and updating that. So that's when we're still, you know, I know we're going to talk about the other options, but if we're not using enhanced inventory, that item receipt is really the same transaction as that bill, but we can make changes to it, right? So it comes in as an item receipt, then we check that bill received checkbox so that that changes it over to a bill, and now we can enter in our reference number and all the things. We go through that with clients though, because oftentimes what they do is they'll enter an item receipt against a purchase order, and then when they get the bill in, they don't go back and update that item receipt. They just go and enter a bill. And so then they end up with all these open item receipts. And also they've doubled up on their GL in those cases, because those item receipts do impact our accounts payable number, but they don't actually show up in your bills to pay window in QuickBooks. So so that's something that can kind of catch clients off guard sometimes, is they're like, I'm entering my item receipts, but then I just go and enter the bill, and then we look at their accounts payable number and it's constantly growing because they're entering item receipts and bills.
Well, and not only that, but then they're having to rekey in the data, right? Because the item receipt already grabbed all of it from the PO, so then on the bill they're having to put in all the items again. That's a lot of work. That's a lot of extra work. And so what you're saying there is to make sure that we use this process, right? Because inside of, if you go just to enter bills, and I say Anderson's here, it'll say open purchase orders exist, but it doesn't give you open item receipts here, right? Is that right? So instead, if you are using item receipts, we have to make sure that we go purchase orders, receive inventory without bill, and then enter bills against inventory, where it'll pop up this box and we're choosing which item receipts are outstanding.
Exactly.
Okay, that makes sense.
I think that's also a check for your AP team. If you've got a warehouse team that's separate from your AP team, you know, you don't want to pay a bill if you haven't received the inventory. So that gives them that, you know, make sure that bill matches that item receipt on what we received and we did get the product.
So if I go in here and I go to enter bills and I have a bill from Anderson's, and then I have no item receipt here, that's a trigger for me to say, wait a second, where's my item receipt, and go out to the warehouse and see if they actually have it. If they don't, then we can call Anderson and say, why are you billing me for stuff you haven't shipped me? Very good. Very good. What would you say, Tricia, what is the purpose of item receipts? Like what are they?
I mean, it represents, you know, the goods that you receive. So, you know, when you get that actual product in your warehouse to sell, you want to create that item receipt so that it can be sold. You know, we want to make sure we're not invoicing customers for inventory that we don't have. And, you know, so being able to receive them then allows that process of invoicing our customers. It allows our inventory reporting. One of my favorite reports I always show to inventory clients is the item stock status report, and how it's driven from your sales orders, your purchase orders, your item receipts, you know, and it's, you know, good data in, gives you the reporting that you need.
So if we don't have the item receipt in, even if we don't have the bill yet, if we haven't received those items in, then it's going to allow for the possibility of negative inventory, which we all know is not the best thing to have inside of QuickBooks. So now we have a question real quick. So it says, in addition to inventory, I use purchase orders to track subcontractor expenses for installation. So that's cool, Vivian. So that you use it for, like, you can go from estimate to purchase order, and you can use it for service items or non-inventory parts or anything like that. So it's really neat that you're doing that. And then we had a question, could a PO be used as a retainer in a law office for a service rather than an actual item? You guys think about that. Could a PO be used as a retainer? I think that what you're thinking there, Lori, maybe is about customer deposits or retainers. I mean, customer deposit, retainers, they're all the same thing, right? And we do have a separate video on that. We could shoot on over to you after this, or if you want to go on the YouTube channel, it shows it there. But I think because that's a sales process, I think that's what you're talking about. Maybe it's retainer for, I don't know. Maybe you can explain it, and we'll come back around to that question. So the last question I have here today, because we're running out of time, is there is a tool that we can enable called Enhanced Inventory. It's super confusing. Enhanced Inventory, Advanced Inventory. It's like, what is this? But it allows you to have the item receipt and the bill be two separate transactions. I know a lot of people out there don't like this feature. I like it. I'm one of those that like it. But Trisha, when would you? What is a trigger? Like, what is something that you hear a client say that you're like, we need to consider enhanced inventory?
Well, I'm going to be honest with you. I love enhanced inventory feature, and so I push it for I push it for all of my inventory clients. You know, it's just kind of like a standard workflow that should be part, because there will come a time when you've received product in one period and the bill is dated in the next period. And so, you know, I always explain, you know, you close your books and, you know, you've got your quantity, you know, what that physical count is, you've got invoices, you know, created off of that inventory. And then if that vendor bill is dated in August, now it switches all your financials, your asset value, you've got negative inventory for those invoices. So I really push that it should just be a standard feature that is always turned on and used.
Kat, what do you think?
So I do love the feature, but I do approach it with caution because it is one of those things that once you turn it on, you cannot turn it off. And so just like multi-currency, right? Also a cool feature, but you can't turn it off. I just make sure that clients actually need that. One of the things that I talk through with them is how long of a delay is it when you get shipped your items that you get your bill, right? If that's only a couple of days, not a huge deal. If it's a month or two, well, maybe you need to have your vendors call us because maybe they need some help with QuickBooks. But I coach clients to use when they're entering bills against inventory, that they check that box for use the item or the bill date as, I think it's bill date as item, like the same date, so it doesn't change financials. But again, like you have to be able to edit that. So if it's going to be 2 to 3 weeks before you get your bill, so you know that that item receipt was entered in at the right cost and all that stuff, and then you might need to consider enhanced inventory versus if you usually just get those bills within a couple days of receiving the shipment, then it's probably fine to not have it on.
The timing is a big consideration. And that's the same we're saying with inventory too, right? Timing is a big consideration for whether or not to turn on inventory or start using inventory. If you are going to be holding things on the shelf for over a period, over a month, over a couple months, then perhaps we need to start using inventory. But if we are just getting it in and relieving it, you know, same day or within a day, maybe that's not a good opportunity or good use of our time, because inventory adds extra work. That's not a good use of our time. So I like that. I like that a lot. Awesome. I think, and I did put in there, so Laura was talking about the customer deposit video, so I did put in that in the questions over here. But we are, let me see if there's anything else coming in real quick. Looks like no. If you guys have any questions, go ahead and ping them in there. And if you have more, we will make sure to follow up with them after. So coming up next week, we're going to be talking about AR workflow, I believe is what we're going to be talking about, maybe estimates and sales orders, and then getting into sales receipts. Everybody knows why to use an invoice, right? But what are these other things that are available in accounts receivable workflow? We still have chart of accounts organization, chart of accounts types. That was a question accounting terminology coming up, but we would love to hear what else you want to learn. I know I have a couple emails I was in my inbox about what are some things that people want to learn. So feel free to reach out to me, tell me what would be important for you to learn in this webinar series. And that's all I got for you guys this week. I hope everybody has a great rest of your week. Thank you guys.